All right. What's going on, traders? Welcome to this week's webinar on Elliott wave theory. Now, thank you so much for being here, guys. My name is Uriah. I've been doing these videos on the Elliott wave, trying to do my best to increase value every single video. So with that said, guys, I'm glad you're all here. We're going to go over a few of the basics. I want to go over some rules. You know, I've been getting some questions and some feedback from my previous videos. So I want to go over the rules, and then I'm going to add a little bit more nuggets in there for you just to help with precision on entries so we can minimize losses and maximize profits. So with that said, I'm going to go ahead and share my screen. And this week, I spent a ton of time trying to look for the perfect example. So remember, guys, it's not always going to be perfect, right? But more often than not, it's going to be correct. All right. So with that said, let me go ahead and share my screen. Guys, we are going to be looking at the United States dollar and the Canadian dollar on the weekly chart, okay? Now, first off, Elliott wave theory, of course, just a reminder. And if you haven't seen my first two videos, guys, go ahead and check that out. You want to watch those before you jump onto this video. But let's go ahead and just review real quick. We have the Elliott wave, which is basically 5 waves up, and the 3-wave corrective wave, right? Now, real quick, let's get into the Elliott wave rules, guys, okay, because there's rules to this, right? Just like Biggie says. All right, so wave 2 cannot retrace more than 100%, which means this wave cannot come down more than 100%. Now, typically, we're going to see wave 2 retrace somewhere around 50 to 62%, okay, or the 61.8. Retracement level. That's the typical retracement level. However, sometimes it's going to go 88.6. You know, sometimes it's going to go a little bit more than just that 61.8 retracement level. However, 61.8 is most common. Now, this is where the big money gets in, right? Once that wave 2 is completed a retracement, that's where big money comes in, and that's why we see wave 3 being the biggest wave out of the Elliott 5 wave, okay? So rule number 2 is wave 3 can never be the shortest wave of 1, 3, and 5, okay? So wave 3 always going to be bigger. Typically, wave 3 is going to be 1.62 of wave 1. However, guys, it can be 2.62 if it's a huge move. And I'm actually going to show you that example with the USD CAD weekly chart, that it's 2.62 of wave 1. All right, so be aware of that. And then wave 4 can never overlap into wave 1. So if you see wave 4 coming down, and then hitting somewhere around here, well, then that throw out the Elliott wave on that one, because that is a violation of the Elliott wave rules. Okay, so it can't fall lower than the wave 1 peak. All right, now sometimes wave 4 will come right around here and, you know, still be valid. So just keep that in mind. And finally, guys, sometimes wave 5 won't reach above wave 3. That just means the trend is completely exhausted. Usually you'll find that when wave 3 is more than 1.62 of wave 1. So sometimes if wave 3 is, you know, 2.62, which is a huge wave, then you're going to see wave 5 only being the length of maybe wave 1 and not, you know, reaching its full potential past wave 3. Okay. So with that said, I hope you take those rules into your trading style when you're looking at the Elliott wave, guys. Definitely it's going to help out in the future. But I'd like to touch on something that's going to help with precision targets for your trades. And what I use for that, guys, it's called a projection tool. Okay, you see it up on my favorites. Now, what this basically what this entails is that a lot of times these moves that are made in the markets, they're identical moves to previous swings. So what I mean by that, guys, I believe I did it perfectly here. So wave 1 to wave 2, bring it up to wave 3, and you're going to be looking at 100%. So what that means is, let's say wave 1 to 2 is about 10 pips, okay? Well, if you bring it up to wave 3, that same swing is going to be around 10 pips, okay? And this also can go with, you know, wave 1, wave 3, typically not wave 3, but maybe wave 1 and wave 5, typically they can be the same as well. But I want you to pay attention to these retracements. Usually the retracements here, they're typically the same, okay? So that's going to help you with entries, because sometimes, you know, you're not sure on wave 4. You're not sure if it's going to be a 38% retracement. Maybe sometimes it's going to be a 50% retracement. Well, what you want to do, guys, is take this projection tool, bring it down, see how much, and see 100% retracement. Look at that. That would have been perfect. We see that there's a cluster between, or a commonality zone between 38% retracement and 100% of that previous swing down. So that's going to be the perfect entry. Too many times people get in, you know, up here, maybe at a 24% retracement, and hits their stop loss. They don't know why it goes down, but all it did was perform perfect symmetry. Now, it doesn't happen every time, but more often than not, it's going to help with precision entries, okay, guys? Especially if you're twin trading. You know, maybe you get in one position at 24%, one position at 38%, and then, you know, finally the last position is going to be at that 100% retracement level, okay? And we're going to see this happen more often than not, even with the corrective wave, okay? So typically, it's, you know, going down the A to B, this maybe, let's say this is about 20 pips down, and we're going to see, look, this comes to a complete 100% of this first wave. So that first swing has the retracement, and then 100% of that all the way down, okay? So these are identical, and maybe this will help with, watch this. I would just clone it. Maybe this will help with understanding. And you see here, oh, perfect, okay? So it's that same amount of moves. And, you know, sometimes it's maybe, if it's 10 pips down, then the next big swing is going to be, you know, 8 to 12 pips, but as long as it's in that area, right? So let me show you an example. And if you want, you guys screenshot this. Make sure you understand the rules of this, okay? And I'm gonna go ahead and show you an example of how symmetry can help with your trading style, okay? Especially with Elliott Wave. All right, so let's go up. We have the USD CAD. Now, this is on a weekly chart, guys, and I know we haven't gotten into harmonic patterns just yet, but we will. You know, one of these days I'm going to be doing a video on that. Just to show you real quick, we have the Elliott 5 wave down. We have a large wave 3 here, and then we have an ABC retracement, right? So in total, our move is X, A, B, C, D, and this is the A to B, C, A, B, C retracement or corrective wave. Okay, so that's what we see here. But I'm gonna go ahead and delete this harmonic and show you guys the power of this symmetry. Okay, so we see the move down, we see the 5 wave down, but also this A, B, C. I'm gonna take my projection tool, bring it up, bring it to around here, and then right here, okay? Now look at that, guys. This swing here, I'm gonna go ahead and delete this so you guys can really see. I'm gonna delete this. All right, so this move here, I'm gonna clone it. And let's see. Sometimes a little bit, all right, there we go. So clone my move here, and I don't even know how many pips this is up, but bring it to right around here, and look at that, almost identical, guys, on this ABC. All right, so it's going to help you a lot with, if you're going to get in here, expect it to retrace about 100% and complete the ABC move, right? And then you can get in up here on the short. Okay, now if we take this, I'm going to take it a little bit deeper, and let's go ahead and look at I think I'm going to show you a daily chart. Guys, I just want to show you some more examples of, you know, using that projection tool just to get the right entry points, okay? So let's go ahead and the daily chart. Okay, so we have 1, 2, 3, 4, 5 Elliott wave, all right? Now, let's look at here. What you want is commonality zones, guys. You want commonality zones. So we have a 38.2 retracement on our Fibonacci. Perfect. I'm going to go ahead and put a line right there, okay? Let me take this one right here. Now, I'm actually in a position right now on this, but that doesn't matter. All right, let's go. So this is our Fibonacci. Now, let me go ahead and take the projection tool, bring it up right around here. Now, sometimes you can play with it as well. Let's go right here. And, you know, because sometimes the wicks will just pop up. We can go to a higher time frame and notice that, you know, this wick has really nothing to do with the move. But look at this, guys. If you did the projection tool, you use your Fibonacci, this is a confirmation that, look, I'm going to get in right at this level here at that 38% and that 100% of this move down, the same move down. So we see this happen more often than not in the markets. I'm going to go ahead and show you real quick too, because there's another example of the same kind of move. Okay, we're going to take it from up here, bring it down here, bring it up here, and let me show you how it's. I believe I did this symmetry on the weekly chart, and it just came out like almost perfectly. All right. So bring it somewhere around here, the top of this move, top of that wick. Okay, perfect. So you see here, this move down. I'm gonna clone it just to show you a better visual, and bring it just like that. And look at that, guys, 100% of the move. So if I know to get in right here, if I get that retracement level, I'm going to go ahead and enter the short and follow it all the way down to about 100% of the previous move. And you know, it's going to help you tremendously with targets on you know, getting in and out of the market. So take this symmetry, take this projection tool. I hope it helps you guys, especially with the Elliott wave theory. You're going to see it a lot, especially in those retracement levels. Now, just to bring it out a little bit and close out this video. All right, so we went over symmetry in the markets, okay? Using our projection tools for the perfect entry, all right? Now, remember, guys, it's not always going to be perfect, but you're going to want to look for commonality zones. So I'm just going to go over that because it's just so important. You know, say you have a retracement. Perfect. You see here how it's like, you know, maybe just a few pips off. That's a commonality zone, okay? That's just going to be, that's just going to help you with precise entry points. And with the precise entry points, you're going to minimize losses, maximize profits, and that's what we're all here for. So with that said, guys, I hope you enjoyed the video. Now, real quick, I'm going to show you a little commercial. Bear with me, guys. I don't usually do this. But you know what? As a beginner trader, you know, this is kind of crucial. And you know what? I don't have it, but what I wanted to show you guys was, and I think I can just show it up here. I'll stop sharing my screen. What I wanted to show you guys is, you know, the power of having people work for you, especially when it comes to the markets, because it can be very difficult to constantly be looking at the markets, you know, especially as a beginner, how to take a trade, when to get out, when to get in, that kind of thing. So just to show you guys, with iMarkets Live and this Swipe Trades account, now it's only April 15th, okay? The market's been closed for the past 2 days, so In about 13 days of, well, let's say about 10 days in the market, this Swipe Trades account is up 592 pips. You can't really see it, but this is the amount of pips caught if you were just to have the app, have iMarkets Live, have Swipe Trades, send it straight to your phone. All you have to do is copy, paste, and profit, guys. It's that simple, okay? They're up 592 pips, and it's only, 10 to 13 days in the market. So with that said, guys, if you're a beginning trader, I don't know what's more powerful than learning and earning at the same time. But regardless, I hope you enjoyed the video. I always enjoy sharing with you and getting feedback. So I appreciate you all. Now, God bless you, God bless your family, and God bless your future. Welcome to the Conscious Wealth.